Welcome to a new episode of the Opening Bid Unfiltered podcast. I'm Yahoo Finance executive editor Brian Sazi. Like I always say, it's a podcast that will make you a smarter investor, period. And we have a real treat on this episode, someone whose career I followed for a very long time. And I'm really honored to have here at our roundtable at the NASDAQ in Times Square. That's Ted Leonsis, founder, chairman, and CEO of Monumental Sports Entertainment. Good to see you, Ted. Appreciate it.
Great to see you. Thanks for the invite.
So for those not familiar with your career, what's under the umbrella of Monumental, talk to us a little bit about what is under the umbrella of Monumental. What sports teams do you own? And how'd you come to own all these teams?
Well, I started buying the teams when I was an executive at America Online, which is a part of...
Still part of Yahoo?
Yahoo, there you go. And the hockey team, the NHL Washington Capitals, came available, and I could buy 100% of that, which I did. And that kind of got my foot in the door. And I was then able to buy 44% of the Washington Mystics, WNBA team, the Washington Wizards, the NBA team, and the building. And I cut a deal where when the owner retired, I could buy the remainder and consolidate it. And we've done that. And now we have built one of the largest sports platforms in North America. We own multiple teams, the Capitals, the Wizards, the Mystics, the Go-Go, which is a G League affiliate team. We've gotten into esports. We own an NBA 2K team. We're the largest investor in Team Liquid, which is North America's most valuable esports team, plays on 11 different platforms. And then we bought our RSN from Comcast. So we've ended up being a pre-IPO, almost tech business, if you will, where we have the IP. We're a digital-first company. We distribute the IP on our own linear and digital channels. And we are bricks and clicks like business. And our business looks like a SaaS business. About 80% of our business is under long-term contract with annual increases.
Sounds like the perfect business model.
And it's why sports teams and these platforms are being valued very, very highly. We were just valued in all of the Sportico and CNBC and Forbes between $7.5 and $8 billion.
All the teams that you own.
Yeah, the platform, Monumental Sports.
What did you identify way back when? Was it the early 2000s when you started to acquire these assets? How did you know these were going to be good investments? And how did you know you'd be a good steward of these assets? You come from tech/media. I mean, you've done so many interesting things.
Well, I love sports, and I also believe in community. I mean, that's what we were building at AOL. Very, very powerful communities of interest and the ability to sense and respond because we were always connected. And so when I had the opportunity to buy the teams, I did it not because I thought this would be a great business. I did it because I thought it was a way to give back to the city. Nothing brings a community, a city closer together than a winning sports team. And at the time, I had the means to be able to make the investments that I thought were appropriate in players and staff and coaching and data analytics, all the things that today are kind of table stakes in sports teams. But back then, people were communicating with fax machines. We were the first team to digitize. I gave all the players, all the employees laptops, put them on America Online.
And that's AI, that's AIM for the generation. I mean, I remember dialing up. That was my first
there you
service.
go. But I soon got to see how underappreciated as a business asset this was, because our contracts, we'd sell naming rights and they'd be for 10, 20 years. We would sell suites for 5 or 10-year contracts. We would sell media rights to national players, big players, Disney, Comcast, NBC, and they would pay us a lot of money guaranteed over a 10-year period with increases. The only variable that we really had was the season tickets and game-by-game tickets. And our season tickets would renew 80 to 90% every year. So I said, this is a better business than an AOL, a Yahoo, because it's subscription-based. It's the advertising is under long-term contract. It's not run of service. And the audience and the market that we're in, Greater Washington, our market goes from Richmond, Virginia, all the way to Delaware, almost 10 million people, 10 million households. And it's the fourth or fifth biggest market in the country. So I thought they were undervalued. I paid $85 million for the Capitals. Seemed like a lot of money at the time. Now they're valued $2.5 billion. I paid
Remarkable.
$350 million for the basketball team. Now it's valued probably $5 billion. So yeah, they've been good investments because they're good businesses, but it's all noise. The reason you want to own a sports team is to win championships, to bring the community closer together. And we've been successful there. Our hockey team, I just celebrated 25 years of ownership.
Congrats.
I was the second fastest owner in NHL history in 25 years to get to 1,000 wins. That means we had a great culture, a great team, great players. We won the Stanley Cup championship in 2018. We had the most playoff appearances, tied with, I think, Pittsburgh for over that 25-year period. So we built something that lasts, that the brand, the team, the culture is replicatable. And we have a historic player in Alex Ovechkin. He just broke Wayne Gretzky's record for most goals. And we've made something there that the community is very proud of.
Is it hard? I asked David Rubenstein, of course, you know him, he owns the Baltimore Orioles, and in his side job, he's the co-founder of Carlisle. He's in his second year ownership of the Orioles. They had a good year the first year. And I asked him, well, he's having a tough year this year. Is it hard? I asked him, is it hard to lose? Like, well, they loved me last year, but they don't necessarily love me now. How have you dealt with seasons that haven't gone your way? I mean, how do you overcome that?
Sports is very different than business. You have a very, very successful business with Yahoo Finance.
Thank you.
And arguably, you'd say, well, there's Dow Jones, there's CNBC, there's Yahoo Finance, and you're still a winner, right? If you're in that echelon. In sports, in the NBA, there's one champion and 29 losers. Mm-hmm. And there's this finality. We had a very good season. In hockey, we had the second best record in the league. We won the East. We won the first round of the playoffs. We lost in the second round. It's over. It's over. Florida won the Stanley Cup. They've won now 2 years in a row. There's no arguing they're the best team. There's this clarity of victory. And, probably one of the great comments all the time is, what's the goal? Win the last game. Mm-hmm. With the most transparent business, we publish stats in real time to our fans. I joke and say, in business, you have an annual meeting. I have an annual meeting at every game. Yeah. People usually don't ask questions at annual meetings. I get booed. You get booed in real time.
You get stories from Yahoo Sports.
Yeah,
in real time.
So it's a very, very unique business. You have to have thick skin. You have to be very committed. There's no posers don't work in sports.
Well, how do you allocate your time? I mean, you own all these are big, high-profile assets and mean a lot to their community in many respects. I mean, how do you divide your time, and how do you know where to go?
Well, just like a real business, you set strategy, you build culture, you have to recruit the right people. You have to agree on a plan, and then you have to trust the people that will implement the plan. And so, we've been able to do that now, and I'm no longer a young owner. I'm 25 years into it. And, the NBA, the collective bargaining agreement, is different than the NHL. So you have to have experts in each of those businesses and areas. From a business standpoint, though, you can consolidate. We have one CFO, we have one general counsel, we have one chief revenue officer, because they're selling inventory. They're using data around the analytics for our customers that they can show to an advertiser, a sponsor. They can activate e-commerce kinds of apps. So we've built a real business, but the heart of it is the success of the teams, and each team has to be managed, because the fans, no one comes to see Monumental, no one comes to see the CFO or the chief revenue officer. They come to see the team, the Washington Capitals, the Washington Wizards, the Washington Mystics. And so what we've tried to do is get the best people, have continuity, explain to everyone what our expectations are, be very, very transparent with the fan base. We have to communicate all the time. A lot of ownership groups, everything is top secret. I have felt that this is a public trust. You're almost like mayor of your community. We have 3 million people that come into our building that we own every year. We're spending almost $1 billion. The city is making a big investment. We're making an equally big investment to reimagine what the arena will be for the next 25 years. But it's redefining a new front door, a new way that downtown DC will be defined. And so you have big social responsibility owning the teams to the fan base, but to the community and to the league.
Hang with us, Ted. We're going to go off for a quick break. We'll be right back on Opening Bid Unfiltered. All right, welcome back to Opening Bid Unfiltered here at the NASDAQ in Times Square. I'm having a great chat with Ted Leonsis, founder, chairman, CEO of Monumental Sports Entertainment. So you're making there's a big investment in Capital One Arena. What does the stadium or the venue of the future look like?
Well, it's digital first, and it's designed fan-friendly first. So that means we have to start to think about getting into the arena. How do we coordinate and work with the city to make the traffic and the entrance easier, faster?
Please make it easy. I mean, these lines are out of control.
What are we going to provide as entertainment and programming and data as they're coming to the game? Then when they enter the arena, we need to know who they are. Facial recognition is going to play a really, really big role. Big data analytics, so that we know when you come to a game, you go right to the hot dog stand, or no, you're a vegetarian and you go to this part of the club. Your seats are here, but if there are available tickets, because we didn't sell them, that you would take those, you should be able to, without friction, be able to get the better seats very, very quickly and efficiently.
You're driving shareholder value. I know you're not a public company. I'm thinking you're driving value in real time, like never before in a stadium.
And we listen to our fans. I mean, a lot of teams say that they do, but we have to listen to our fans. Washington, D.C., it's a very educated, very digital savvy kind of community, and their expectations from us are very, very high. Safety and security, really job one for us. We work very, very closely with all the federal groups, Homeland Security, FBI. We have a metro right under our building that has to be safe and clean. We have to worry about a lot more for our fans. The lighting has to be appropriate outside. The bathrooms, we don't want long waits getting into the bathroom. And so this is a whole new way of looking at the fan experience, but the fans not only expect it, they deserve it. Ticket prices have gotten high. Revenues have increased because ticket prices have gotten higher. Suites have gotten higher. To put that in perspective, we now have bunker suites, $2.5 million a year. That's
What's a bunker suite?
Bunker suite is like a private room that you as a company or people getting together can mingle, eat, drink, dine.
Sounds amazing. I've never gotten an invite to a bunker suite, but hopefully someday I will.
And then you walk through the suite down to your seats, and the seats are on the floor, the seats are on the ice. But $2.5 million. When the building first opened, the suite was $200,000. Huh. So we have to really make investments for the experience and for the materials and for the way we service people. Their expectations have grown.
Just listening to you talk, I wanted to ask you about what you thought about some of the valuations that the teams are selling at now, billions of dollars. But I'm listening to you, and I think I can make the case that these assets are still undervalued. People are so focused on the billions that they're going for, and they're not thinking about the billions more that could be sold. They'd be sold for decades down the line.
Well, I think there is still a lot of upside in sports and building the value. There's a scarcity that is very unique. There's one NBA team, one NHL team in Washington, D.C. So if you wanted to buy in or you wanted to buy control and you wanted to be in Washington, you've got to come through us. That's very unique. Secondly, we do these big media deals, and obviously the value gets out. And this latest one with the NBA, it's a big number, and it's for 11 years. So there's a predictability in the business model that is very, very unique. There's a comfort there, and you can do time value of money. You can take a look at what the estimates are. I think one day, now that private equity has started to make investments into sports teams, sovereign wealth funds, we brought in a sovereign wealth fund as one of our investors, that the bigger teams in the bigger markets, we're going to become an asset class. I'm now starting to operate our business like it's pre-IPO.
Do you want to IPO? Is that something you look at?
I would like to be ready if that ever were to happen, be an opportunity, because the assets are getting so highly valued. I'll give you a great example. I had a very close friend, a partner, and he passed away. And he owned a small piece, 4%. Forbes just said we were worth $7.5 billion. Not a lot of people have 4% of $7.5 million in cash laying around. So you have to find someone to buy it. If you were a public company, they could sell to the public. There would be a mechanism for liquidity. And I think we're going to see, as people start to make investments at the much higher valuation, that they're going to want some kind of exit. And public markets would be a way to do that.
Is it your intention to keep the business in your family? I mean, do you have your family members working with you?
Well, the way the leagues have set everything up, and it's appropriate, there's debt limits, and then there's ownership limits for control. And every team has to have a control owner. So I own about a third of the business right now. And yeah, we intend to keep it in the family, because you have to have a control owner. And we're having a good time with it. And, it's building value for generations to come. But I have minority partners. I've got a sovereign wealth fund. They all have their own fiduciary responsibilities. So I have to start thinking of them like they're shareholders in a big company. I'm a venture capitalist, Revolution Growth with Steve Case, and we make investments in companies, $50 million, $60 million investments. These companies go public. And, Kava was a big hit. Tempest was a big hit. These companies that go public, they're sometimes valued less than Monumental Sports is.
Yeah.
Right? But they have that advantage of liquidity, of having infrastructure like NASDAQ, where you can place a value and you can trade if you want.
I was talking to Jason Wright, former, I believe, the president of the Washington football team.
Yep.
Now he's working with Ariel. And he told me that he's really leaning into women's sports, notably the WNBA. He said WNBA is like I believe it was like a small cap stock. I mean, just so much growth potential. What is your 5-year outlook for the WNBA asset that you own?
It certainly is the growth stock. We're the second longest tenured WNBA ownership group in the league. Herb Simon in Indiana is first. I believe a long time, and I believe that you have to make investments. We were the first WNBA team to build a practice facility, and they share the practice facility, the infrastructure with the NBA team. We were the first to put all of our games on our own network, and then we did a pre and a post game. These are innovation. These are new things for the WNBA, and we were patient. And it took 25 years for the league to kind of hit its stride. Now, it all grows out of Title IX, which was created in Washington, D.C., because the women athletes had to be treated equally. Their athleticism, their skills, the quality of the game is great. The competitiveness is great. The networks have taken notice. They'll now pay us money to put the games on air. The fans have taken notice. The media now is treating the game and the athletes with respect. So the spiral is going up. And I would expect as the NBA continues to expand, we're NBA China, NBA Africa, there's talk of us going NBA Europe, that there'll always be an NBA and a WNBA component.
Yeah.
And I think the WNBA has a lot of upside. 4 years ago, my team was valued at 0. No team as a comparable had sold for money. This year, my team is valued at $250 million.
Wow.
So we just sold 3 expansion teams to NBA owners for $250 million apiece. So, I mean, it can turn around very, very quickly. Sure. You can look really, really smart if you're patient. And but the league needs more investment from ownership. It needs more investment from the WNBA at corporate. The players are very, very talented. And we have to capture this moment in time right now and make sure that we can get to the promised land, if you will, where the league is fully developed and it's built value for all of its constituents.
Lastly, before I let you go, you're sitting on, I mean, an amazing collection of assets that have significant value. As you've explained here today, are you in the market for another team? The Nationals, I mean, they're sitting right there. Why not raise some money off of that value in the portfolio? I mean,
yeah, we have the means to do that, and we very much would like to buy a baseball team in our hometown. I love the game, but the team is in good hands. It's owned by the Lerner family. We're very close friends. They also own a small piece of Monumental. And they don't seem focused on selling the team right now. They're rebuilding the team, rebuilding their business, and I have to respect that.
Maybe David Rubenstein, if he's not liking the Orioles in a few years.
Yeah, well, I tried to buy the Orioles too, and the reason is, I think scale really matters. These teams in markets. You have to compete with teams in much bigger markets. So the Nationals, the Orioles, they're in Washington, D.C., and they're competing with the Mets and the Yankees. They're competing with the Dodgers. There are teams that are spending $400, $500 million in baseball. And then there are teams that are spending $50, $75 million. It's very hard to compete that way. The CBA and the NBA, the CBA and the NHL, it's more about parity. Can't have those kinds of differences. Also, if you're going to go direct to consumer in a subscription basis, it really is a better offer to fans to be able to say, buy a season ticket for the whole year and watch every hockey game, every basketball game, every baseball game.
That'd be great.
And pay the cost of one courtside ticket, right? And so, and we're all learning that because OTT is a relatively new phenomenon. The cost of acquisition of a consumer is high. But if you don't make the playoffs or you get eliminated in the first round, fan cancels. Then you have to wait till the next season starts, and then you have to go reactivate them. So I think you'll see a lot of basketball teams, hockey teams, baseball teams either merging or doing virtual mergers so that you can have year-round programming and an offer that's very endemic to the city and the community on a year-round basis.
Thank you for giving me a ton of time. I didn't even get into the AOL days. We'll have to have you back because I'm fascinated with the early days of the internet. Ten Leonsis, it was a real treat to spend some time with you. Appreciate it.
Thank you. Thanks for the invite.
All right. Do continue to hit us with all that love on the social media and podcast platforms. I love all the feedback. It makes me a better interviewer, and it makes me just better at what we do here at Yahoo Finance. We'll talk to you soon.